Hey there, everybody. Welcome back to another 21st Century Renaissance and another open interest newsletter breakdown on GameStop. I'm your host, Dr. Michael LoPiano. It is Friday. It is finally May OPEX, and we are wondering whether we're going to get a little bit more of this bearishness, which showed its face early at the beginning of the day yesterday, which we were very cautious to avoid during the beginning of the market day yesterday in yesterday's breakdown. So we're going to think about whether we're going to get some more of that, or maybe we see some surprises, something potentially tied into the release of new FTD and CAT consolidated audit trail equity error data. So that's coming up today. We will be breaking down more of this data, or I should say we will. I will, we'll work on this together at tonight's live stream. So at 4 p.m. Eastern Daylight Time, that is right at market close. We'll be on YouTube and X, so do be sure to pop in for some of that. Before we get started with our breakdown today, have to go ahead and hand out our gratitude. So thanks go out to AmGo Blue, otherwise known as Jake Graff, for sponsoring today's video and newsletter, as well as to Ken Wedmerland and Not Medical Advice for helping offset some of my data expenses on a monthly basis. Many thanks to them. Many thanks to everyone who has supported the channel in the past and everyone who has and will support the channel going forward in one way, shape, or form. Thank you very much. So very, very interesting things, right? So you remember yesterday we talked in particular trying to understand what this type of price action was really all about, right? What was underpinning this very intriguing series of days of, say, very, very volatile, dynamically upwardly volatile opens, and then just kind of continued bullish day after bullish day after bullish day, right? In general, right, we're working from a price action model here that is not connected to what sources of supply and demand we might think are most important when understanding what affects a particular market in securities markets, right? We're working from a price action model that assumes that the majority of what moves the price is tied into these more market mechanic elements and sort of best practice or market practice events, things like options hedging, FTD settlement, and now clearing errors from the consolidated audit trail. So in particular, right, yesterday we looked at and the day before, we were sort of looking at this 35 calendar day deadline on these 77 billion errors that took place in the early portion of February, of April. So from April 7th up through April 10th, we now have our next report, just came out after hours yesterday. So we now have it from the 11th up to May 8th. And what we can see here is we do have another set of days with particularly high error counts. So Region Formal has done a really good job at tracking what sort of critical numbers tend to tie in to price runs or price appreciation runs in GameStop. When we see several billion, so when the number gets into the billions, that's when we tend to see within 35 and certainly within 70 calendar days, a significant appreciation, a significant price up in GameStop. Not incredibly precise, but there's something to that. So is what we're seeing taking place here, is what we saw, for example, yesterday. We'll break this down in a bit. The tail end of that 77 billion consolidated audit trail equity error clearing process. And if so, if that is, then we might have a bit of a reprieve during today's trading, the 16th, which does align right there align with an options expiry. So this would allow some of that momentum to kind of die out before it then resumes next week, right? So then we have Monday, Tuesday, Wednesday, and then nothing certainly to speak of there the following week. Yeah, right. We have this was a short week, right? Because we had no trading on Friday because of Good Friday. So we have some of this, and then going forward, right, then we have another day. So it's just a single day, and that is the 1st of May. I will note that we've talked about that being a very strangely low outstanding share count day for XRT, at historic low. The lowest number of outstanding shares ever in XRT was logged on the 1st of May. So that was 1.75 million units outstanding. Very recently, we did pop up to 8.2. So just a couple days ago, 8.2 million. So right, we've seen all of a sudden, we've started to see these huge swings in XRT. So all the way up to 9.7 million, which is a 52-week high, then down to 2.3, which is a 52-week low, then back up to 8.2, right? Then down to 1.7. Now we're back up here again. Now we're on our way down, right? So seeing huge swings in XRT does seem to indicate that this fund is under stress. We did get our first FTD report from GMEU, the 2x leverage long GME fund, which, wouldn't you know, had FTDs from the very first day that it traded, which is not supposed to be possible, right? You should have T+3 on them. But that was not the case. And then if we go over and look at XRT itself, right, we got our new FTD data from XRT, and what do we see? 415, massive number of fails, 1.2 million, even more than we saw on the 3rd. So 415, 417, big number, right? And that happens to fall right on top of, so those 1.2 million right in that cat error window, and then we had a bunch too on 429. So are these going to come into play? It does seem that, T+35, if we're understanding these deadlines, right, that sometime next week, right, these errors, these FTDs, settlement clearing, should be coming into play. I mean, right, they can some people have said, right, they can daisy chain this, they can internalize this, but we are getting really close to quarterly rebalancing. Something about the approach here makes it very difficult, especially if, right, you don't want to incur too many and then it gets close to the reweighting. I think, so what Jake 2B may have suggested is that on the approach, I think Richard Newton's also suggested something like this, on the approach to, say, XRT's reweighting, which is on the third business day from the end of the month of June. This may have played into some of what we saw late in Roaring Kitty's return to X and to Reddit last year. So some of this, right, there may be something at play here in terms of getting these FTDs cleared, right? You don't want to internalize them too much. There is this whole quarterly rebalancing thing, and you could get stuck if you don't have this stuff cleared by the time these particular days come up with the funds, right? Given that so much of what allows institutions to control the price involves this fail to deliver scheme with respect to one or more ETFs at a time. So we'll be breaking more of this down, as I said at the beginning of the video today. We'll be breaking more of this down on today's live stream. We'll dive into some of this, right? We've also got a ton of fails on some other funds as well. So we'll be thinking about this, breaking this down, seeing what today's price action has in store for us as well. Thinking about, trades as well and good trading practices with respect to this type of price action. But of course, right, thinking about what this then means heading into today, well, right, we do kind of have this lull in our cat error data. We don't have any particular FTD day lining up with today. So why is that? Number one, is it possible that funds in particular do this, right, in order to take advantage of the options chain, right? So they know, right, part of the reason that they know part of the reason that they can use this to their benefit, right, is by using the options chain, right? So you might say, okay, why internalize this stuff? Why not just buy out, just close your positions immediately, do it along the way, do it bit by bit. And number one is, right, you don't want to do it bit by bit, because if you can concentrate all this stuff together, if you can chain this stuff up together, you can cause very profound effects in the underlying stock as a result of your settlement and your clearing practices. Okay, well, if you're going to cause a very precipitous movement sort of all together, and you can chain all this together, well, then you can bet on what would otherwise be a really some low probability options events, right? So you know how long your buying sequence is going to last. You know how long you're going to push the price up. So what you can do is you can, as we've seen, so if we bump over to our technicals here, right, you can do something like this, right? So you got this clearing period, right? And you say, okay, well, as we get into sort of mid-April here, we don't want this getting too high, all right? So we're just gonna start redirecting stuff. We're gonna start sending orders. We're gonna kick it down the right, okay? Because we don't want this volume. We don't want this immediately here because that's gonna blow out the options chain. We have options positions. No, 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 no. We're gonna internalize this. We'll make a ton of money on short options in here. Okay, we'll make a ton of money on short options because everybody's going to go, oh man, it's definitely going to 30. So we're going to sell a bunch of covered calls here. We're going to do this type of thing, just get this working in our favor. Okay, we'll collect extra cash because of that, and then we'll kick out our buying volume out here, right into here. All right, then what do we do? All right, well, we're going to trade flat because this shouldn't have been flat, but it ended up being flat because all the buying volume got kicked out here. So volume's going to come down. IV is going to come down. All right, well, IV is going to come down. What's that mean? That's going to mean, well, our short options are going to die. They're going to lose premium. And at the same time, right, longer options farther out, those are going to become less expensive. So then we get into this low environment. Okay, low volume environment. What do? We go out, we borrow shares, push the price down a little bit. Doesn't take a lot of shares to do that when the volume environment, when the trading environment is not very hot. So then you push it down. Okay, we push down, push down, push down. Oh, and what happens in here? You get a new bottom, and you know, right? You calculate, you figure, okay, we got this many shares to cover in this many days. We know this is coming, right? This is maybe even more institutions know this is coming. They know this is coming. So they go, okay, we're going to set up long options positions right here. We know we're going down. We're setting this up here. Maybe we even do some puts here, tie in some puts with our shorting. And then once we get our positions established here, now it's time to cover the FTDs. Now it's time to clear those cat errors. What happens? Up we go, up we go, up we go. And our options, which we bought at a discount now here, we are selling at a premium up here. Okay, right? So you got some of this too. And then what do? Well, then we sell that, and then we can enter into positions as well on the short side. Once again, do what we did back here, and then let this stuff cool off again. So what are we probably looking at here? Are we looking at a cool off? We did call this big dip right yesterday that occurred. We saw some put positions being put into place and expanded here. Are we destined to just kind of cool off a little bit more here? Maybe for a day or so. That's more or less, I guess, my standpoint for now is I think maybe with a day or so, if I'm correctly understanding how this cat error clearing process is going, right? If we're understanding these T+35 deadlines are being respected. I mean, yes, there are things that they can do. They don't have to do that, but it does look like, right, that's something that's occurring here. If that's the case, then we don't really have anything. We don't have today as a significant day where we could get an injection of some of this external buying. If we take a look, right, so if we take a look at yesterday's trading here, right, we got something of this late day VWAP order, right? So whenever we see, right, you guys have heard me talk about this before. Whenever you see diagonal lines like this, that's a pretty good indication that you're looking at a volume weighted average price order. So this is somebody with a lot of shares to buy who wants to close a position, who must buy them on the lit market, decides to close that position wants to get it at the best price possible. So they have a lot. They have to buy it on the lit market, but they know if they put in a single order, it's going to make things go nuts. It's going to mess up. It's going to mess up the pricing. It's going to mess up the bids. It's going to do all that. So they put in a volume weighted average price order, and it's going to chop, right? So then traders will push it up and down, and then as it comes down, right? So you get up here, right? Traders will push this up. They'll go up. Too much, wait for it to come back down and buy and chop, buy, and too much and come back and buy and chop too much and come buy, right? So traders will mess with this, so it kind of gets this choppy pattern here. You'll see something like this. So it looks like somebody potentially also hopped into maybe some options positions on this covering, something like that, and then it sort of resumed. So like it started here and then it kind of accelerated as well. We do know for a fact, right? So this is one thing. We know a number of those long puts that were opened yesterday were closed. So these were the ones that were shorter term and farther out of the money. So, right, so the 523.25 puts very far out of the money, closed for probably just a little bit of profit, like 20%. Hopefully they got a discount on the fees because that ended up being something of a scalp, but they got out with a little bit of profit. Same thing here, 27.50 for Friday. Again, this one probably a little bit better. Actually, this trade fared a little bit better. Yeah, but again, not a ton of profit. 30-ish%. I mean, 30-ish% is not bad. It was a big trade. So this one is out. So, and then this one for 25.5 put for 523. This one again, kind of just a couple cents, right? So not a ton here, likely not a ton here, but hopped out of these. We did get a little bit more put insertion. So this was earlier in the day, 27 puts were sold at the or bought at the ask for 523. So for next week, pretty decent block, about 2,000. So we did see some of that. So some of that may have affected this initial move here off of the bottom, but it does look like this was related to something. So either closing a portion. This is too big to be just closing the short position. Some of this short position looks like this was shorted down using available liquidity. Right, we can see that we got big fluctuation in our numbers here. So a big fluctuation overnight, couldn't tell it intraday, but overnight, right, we saw shares available to borrow go down a little bit during the day, but from 5.1 was their height before market open down to 4.1 million very early in the morning here. So this was closed. These were used likely in order to adjust the price, and then this order was punched in. So yeah, I mean, this could have been for those from those cat errors on 515, went right into the close, even continued a little bit out of the close. So very interesting to see that. Okay, we don't seem to have anything like that coming up today. So I wouldn't be surprised if we saw something of a cool off. Again, maybe nothing quite as aggressive as what we saw yesterday, given that we do have a number of days next week, which do look like they could involve some significant buying. Right, we did see a bunch of these dark pool orders come in very late. These were possibly tied to the convertible bond arbitrage. Technically, right, if we look at our technicals, it does look like we're still mostly on a bullish trend up. So, you know, not crazy, but it does look like we're still kind of on this trend. It does look like we see some possibility of maybe cooling off here back down to this 20-day moving average before then maybe resuming up here. Options wise, I think it's very unlikely that we see much movement beyond the kind of middle of this range. I'm happy to be surprised. We did see a ton more $30 calls come in. $30 is going to be a very difficult options hedging position to move past. It is really huge. We have over 50,000 calls there. Seeing a close over 30, I think, is extremely low likelihood. I think it's such low likelihood, and I think it's so important to the options market maker that there would be significant investment in shorting of the stock in order to prevent such a close from occurring. At the same time, we could see some of this liquidity deployed again to move us below that 28 position. Maybe they don't, right? Maybe so whoever's, you know, adjusting the price here through intraday moves will be able to keep us, won't be able to push us down through 28 and back to 27.5. Maybe we'll get a test again down at that 20-day moving average there. But, you know, by and large, options are pretty much just telling us we're going to be in this, you know, in this box, in our 28 to 30 box. If we do get some interventive shorting, that could move us a little bit lower. Surprise, right, from our sort of broader environment here. PPI came in pretty good. Probably stable in SPY. I mean, all that also says probably be stable in GameStop. So certainly not coming out with, you know, kind of big bearish expectations. A lot of those bigger put orders for farther out are still on the board. Not saying those are necessarily going to, you know, go in the money or anything like that. I am still wary of the potential of being adjusted to the downside. I'm a little less like, oh, this is definitely happening in the way that I was pre-market yesterday. I mean, that was pretty strongly telegraphed. Not anticipating close above 30. I would be prepared to try to see an institution or more institutions attempt to adjust the price below 28 if possible. But I would say the most likely trading range is, again, going to be in that kind of 28, 29 pocket we've seen. Maybe we do move up a little bit again into the 29s before fading back down there. But that's more or less what I'm looking out for today. We are going to break down, as I said, more of this FTD data, think about what's going on with cat errors as well, some of this new data at the live stream tonight. So do make sure to drop by, love to see you guys there. Love to hear questions. Love to just hear from you guys in general. So looking forward to that. So yeah, we'll see you guys there. Have a great trading day. Have a great Friday, and yeah, we'll see you guys soon. Take care now.